Good morning, all. Welcome at ICI classes. We were at accounting standard beta. Good morning. Yes. Send your presence. Siddharth, Hitesh, Karthik, Annie, everyone. Good morning. Good. So, beta, we have already discussed about various aspects of accounting standard by way of the name of accounting standard, starting from AS4 to AS19, we have reached. And finally, we are going to discuss about some technical aspects of AS19 and then we'll go for AS20. So tell me where we have left at AS19, those who are present. Tell me where we were at AS19, what we have covered in that. Do you remember? No, you doesn't remember that? Okay, good. Those who remember, tell me where we have left. So let's start with the recap of AS19. I brought a new thing for you. Basically, I have prepared these for the purpose of giving training to you, not for the purpose of uploading, because for uploading purpose, I have already uploaded for you. And this is something new, not earlier uploaded, but this will be a good glance for the purpose of giving a better presentation of all AS. So today we will discuss from here. AS19 we have discussed beta. So in AS19 it is very much clear. The concept is to discuss about the appropriate accounting treatment and disclosure in relation to finance and operating leases in the books of Lessee and Lessor both. So the target is very much clear that we are interested to discuss about the Lessee and Lessor both. And their accounting treatment and disclosure is an important point for us. We have discussed about the classification. On the basis of which these leases will be distributed between finance and operating leases. So in case of finance lease, you will have to keep it into your mind that finance lease is the only lease where we have transferred all risk and return relating to ownership to the lessor. So the concept is very simple, that when we have transferred, when the lessor transfer to lessee, all the risk and reward, whatever the risk and reward is there, that has been transferred. In that case, it is a finance lease, otherwise it is a operating lease. Means if we are taking any property on rent and no other concept is there that risk and reward is transferred, only reward is transferred or risk is not transferred, because if the property will be damaged, that is to be repaired by me. But if the property is property has suffered from any natural disaster or any such type of problem which is not in my control, yes, I will have to repair it if I am using it. That may be a chance, but if it is going to be destroyed, if it has been destroyed by any reason, then that is not to be considered by me. That is not a point of discussion for me. I will not have to take that risk. In that case, it is a finance lease. In that case, it is an operating lease. But if risk is also mine, that the property has been given to me and the risk is mine, if the property was destroyed from natural disaster or from any reason, means all risks and rewards are transferred. So that is the point which has been mentioned here, beta. So keeping it into mind, you will have to discuss about these leases. So here it is very much clear. If all the risk and reward all the risk and reward is transferred in relation to ownership. And this is what substance over form means. Logically it has been transferred, not otherwise. Substance over form means we'll have to discuss about the concept that logically it is transferred, not in books it has been transferred, but actual risk belongs to the owner. Then this is purely wrong. So here owner doesn't have any risk. The risk has been transferred to the tenant or the person who is taking it on lease. And this is purely done at the time of inception of lease, when the lease has been given. When the lease has been given, at that time all things are done. It is completely based on the lease agreement and the commitment of the parties to the principal provisions. So this has been decided preferably at the time of inception of lease. When the lease agreement is formed or a commitment by the parties to the principal, depending upon the provisions of lease. And it can be reclassified. Means once it is a finance lease, doesn't mean so that it will always remain a finance lease. There may be a chance we have reclassified it later on, but not due to change in estimates. Means this is all about reclassification by rules, by provisions. If there is some such provision or some such meeting is there that they are interested to reclassify it, they may do it. So that is the point which has been given here. Talking about operating lease, those which are not finance leases are operating leases. Then we have to discuss MLP. What is MLP? MLP means minimum lease payment, that we have already discussed. Lease payment over lease term, whatever the total payment we have to make, plus residual value granted by or on behalf of lessee. Means either granted by lessee, that was already been discussed by way of some example also. I think it is clear. Gross income meant for MLP plus ungranted residual value. And net investment is also discussed, that gross minus unearned finance income. Now, what is unearned finance income? Unearned finance income, see whether it is given here or not. If it is not given here, I will discuss it from the modules. No, it is not given here. So let's go to the module for the purpose of understanding unearned finance income better. See your detailed module, because there it is given to you. Yeah. Unearned finance income is very much simple. Let it be very much clear that whenever we are talking about gross investment in the lease, gross investment has already been discussed. Just assume gross investment in the lease is rupees, just assume it is 80 lakhs. Now you have to check the present value of that. Present value of what? Present value according to financial management. What we have discussed in financial management, there we have calculated net present value, all that. You know it very well. If you doesn't know that, you must have to understand this thing, that if amount is to be received after 1 year, just assume I'll receive an amount after 1 year rupees 10 lakh. Now what will be its value as on today? that will be completely depending upon the interest rate which is included in it. So assume if I'll invest any amount with me, whatever is lying with me today, then I'll get an interest rate of 6% on it. So I'll consider this 10 lakh in a reverse mode. This is a discounted value, that if that 10 lakh is received me today, whatever amount is received me today, after adding 6% in it, it will become 10 lakh. So just like this, assume today if I'll receive 100 rupees plus 100x, then on 100x, I'll get interest rate of 6x. It will become 10 lakh after 1 year. So 100x plus 6x means 106x is equal to 10 lakhs. So x is equal to 10 lakhs divided by 106. Like this, present values are already calculated through a table, and that table will be available to you in your exams. This is a way, the concept I have given you, that whatever the amount received, if I have amount with me, whatever the amount is with me, I doesn't know. Whatever amount is with me plus 6%, if added, it should become 10 lakh, because this 10 lakh will be received to me after 1 year. So after 1 year, if I have to receive, so how much amount, how much is the present value of that amount today? How much is the value of that amount today, whatever I'll have to receive after 1 year? So that I am interested to calculate. For that purpose, I have done this thing. Assume I'll have a amount of rupees 100 today. If I am investing rupees 100 today, 100x, because we doesn't know the exact amount, so 100x. Obviously, I'll get interest of 6% on it. That will be 6x. So it will be 106x total. And 10 lakh is the amount which I'll receive after 1 year. So how much is the value of x? You can get it. That will be multiplied with 100. You will get the amount. So x is equal to, you may get it. How much it is? So this is a present value concept. In this way, present values are already given to you. Assume it is 9 lakh 20,000. 9.20 lakhs, you may say. So if 9.20 lakhs is the value, then what we have to do is, we have to deduct that from this 10 lakh to get the unearned finance income. Means whenever we are interested to calculate unearned finance income, what we have to do is, you have to go for the gross investment. So how to get the gross investment, that should be known to everyone. It is 80 lakh minus present value of MLP, whatever I will receive during the whole life. Assume it is 60 lakhs plus, what do we have to add in it? That has been mentioned, any unguaranteed residual value. Any unguaranteed residual value accruing to the lessor at the interest rate implicit in the lease. Interest rate I have already mentioned you, that has been already finalized. So any unguaranteed residual value accruing to the lessor means the amount which he may earn, but that is not granted by anyone. That has already been discussed. If the lessor has been granted by someone, that he will get 2 lakh of 10 lakh rupees as a granted residual value at the end of the life of the lease. In that case, that is a granted residual value. But actually, he is expecting that I'll earn 12 lakhs. So 12 lakh he is expecting to earn. 12 lakh minus granted by to him, that is 10 lakh. So 2 lakh is his ungranted residual value. So that 2 lakh will be added in it, obviously on the present value basis. Present value of ungranted residual value. So that is to be added. It will be 62 lakhs. So this difference of 18 lakh is the unearned finance income. So review it once again. If there is any doubt, I would like to let it be very much clear to everyone. First, assuming it is clear, beta. Good. So net investment in the lease is the gross less unearned finance income that has been a net investment in the lease is the gross investment in the lease less unearned finance income. So when whatever unearned finance income you have calculated, this you have to deduct from gross investment to get the unearned to get the net investment also. So these are all calculations, beta. We have to understand these calculations for the purpose of our solving the question in our exam. Implicit rate means the rate at which we are expecting we may earn the income if everything goes normal, and whatever is our income rate, that is called implicit interest rate, and that will be used as a discounted rate for the purpose of calculating the present value. So I expect everything is discussed regarding this. Coming to accounting treatment, how to treat it in accounts. Talking about finance lease, as we have already transferred risk and return both. That means for now, for the purpose, so for in the books of lessee, it is obviously an asset for him because lessee has taken it over on for use, but risk and reward belongs to him. If risk and reward belongs to me, obviously I am the owner of that property. I'm just like the owner. So in the same way, here lessor has transferred this asset indirectly because he has transferred risk and reward. So if he is not liable for risk and reward, obviously he is not going to be the owner of that property for that particular period. The ownership will be with the lessee during that period. It is very much clear. So due to that reason, we will treat it accordingly. I'm taking an example for you. A has given a property on lease to B. Now A has given to B, but risk and reward is transferred. Risk and reward is transferred. How it will be confirmed that risk and reward is transferred, that we will discuss. Better we will have to discuss it now. That is always better because it is an important part. See whether that has been given somewhere. Maybe I have discussed it with you or not. No. So let's take some examples from your theory part. How it is considered that the risk and return is transferred. Yeah. These are the indicators of finance lease. How we will understand that this is a finance lease? This will depend upon two basic conditions which are given here. These are or, not and situation which normally leads to finance lease. How we can understand that this is a finance lease? If the lessee is given a right that at the end of the lease he will be able to get that property, he will be able to get that asset, he will be able to get that property at a price which will be much more lower than that price. We expect that I am going to take some examples for you by way of giving an understanding. Here examples are also given to you. You have read this example? Rahul, I am not clear which concept you are interested to review from my side. Now, we'll have to consider the concept. Actually, what happened if we'll give something on lease to someone? In that case, it should be very much clear whether it is just for the purpose of an income or it has been actually sold off. Just it is shown in the books as a long-term income. In case of finance lease, what happened? We have actually sold the asset and getting the payment in installments. It look like that. Actually, it is. It meant for that. We have given our asset to someone for rupees 10 crores, and the payment will be received by way of you may say installments, and the installments are in the way that he will pay me 1 crore every year, and at the end of 10th year, the property will go to him. Property will be transferred to lessee. So what it is? This is a very much clear. This is a sale. So due to that reason, we are trying to differentiate between finance lease and operating lease. Because in finance lease, what happened in the case of finance lease, property is transferred this way or that way. Or you may say that it has been pre-decided that the property, the lease rental will be 1 lakh per annum, and at the end of 5 years, property may be acquired by the lessee at 3 lakhs. And we know it very well, the value of the property at that time will be 5 lakhs. But I have given him an option that he may acquire the property at rupees 3 lakh only, and this has been given at the inception of the lease. Means when we are writing the lease, it has been written in that first right of acquiring will be given to the lessee at a price of rupees 3 lakh only. Whatever the actual market price is, that will not be considered. So this is a finance lease because here we are indirectly selling our product. So this is basically a sale, and we can't treat sale as a debtor in our books of accounts, because sale is somehow different and debtors are somehow different. So due to that reason, all that has been done. We are trying to, our government is interested to understand whether it is a operating lease or a finance lease. So for that purpose, government is trying to do that. I think it is clear to everyone. So here it is very much clear. Lease transfer, lessee transfer ownership of the asset to the lessee, lessor. Here you will have to write lessor. Lessor transfer ownership of the asset to the lessee by the end of the lease term. So this is already clear. That means so this is a finance. Lessee has the option to purchase the asset at a price which is expected to be sufficiently lower than the fair value at the date of option. Or he may write whatever the market price is, he will be given at 50% of that market price. So this is very much clear that this is a finance lease, not a operating lease. So example is given to you. I think it is clear. Now, this is also good thing that we have an asset whose life is 40 years, and for 32 years it has been given on lease. So if we'll see 80% of its life is already leased down. So it means for there's nothing left, only 8 years is the life which has been left after that. So lessee is going to get benefit of the maximum life part of the life. So this is a finance. Or this is also a good thing that when it has been given on lease, then whatever is the MLP amount of that lease amount, we have already calculated MLP of total lease amount we are calculating now. So MLP we have calculated, this is 80 lakh rupees. And fair value of the lease asset is also 80 lakh rupees or 90 lakh rupees or 85 lakh rupees or 75 lakh rupees, means fair value of the leased asset now a time. At now a time, we are going to recover the complete fair value of the asset by way of giving it on lease. So this is very much clear that we are not going to suffer any loss in this case. So here it is just like a finance. This is very much important. Very good. He says your asset is of such nature that it can be used by that lessee only. No other lessee can use it without major modifications. Means a machinery is given to someone like this. This is a good example. We PQR a hospital ordered 10 ambulances. So here, if you especially it has been specially designed as per the requirement of PQR. Now these ambulance cannot be taken by someone else without major modification because everyone has their own requirement. So due to that reason, this is also a finance lease because in this case, it cannot be taken by someone else otherwise. So it is specifically for them. Just the payment is deferred for the purpose of giving benefit to the. It is just like in the case when you are seeing there are toll plazas in all over the India. You are seeing a toll plaza. What happens is toll plaza government gives a contract to a company that they have to construct a road, maintain a road. So construction and maintenance responsibility is given to someone. And government tells them, we will not pay you any capital payment. Instead, you will get a revenue payment, recurring payment of by way of toll. So what it is, basically, government has to make the payment, but the payment is deferred by way of converting it to a revenue payment or recurring payment instead of a total payment at once. So that is all in this case. Here also we have done the same thing. This is also good thing that if the lessee cancels the lease, then whatever loss will occur to lessor will be reimbursed by the lessee. So it means for lessor is not going to suffer due to any reason. So if he is not going to suffer, it is obviously a sale, just like a sale. If gain or loss from the fluctuation in the residual value, if the gain or loss from the fluctuation in the residual value accrues to the lessee, means we have given it on lease to lessee 4 rupees 10 lakh per annum. Now simultaneously it has been granted by the lessee that the value of property at the end of the lease will be 20 lakh rupees. Now this has been granted by the lessee. So lessor is not going to suffer any loss. In that case, obviously, if the lessor agrees to allow rent rebate equaling the disposable value of the leased asset at the end of the lease. So obviously, whatever the gain or loss, both goes to the lessee. Means if it has been sold at the end of the lease, it has been sold for a value less than 20 lakh, that is 18 lakh, 2 lakh loss will be borne by the lessee. And if it has been sold for 28 lakhs, then the profit of rupees 8 lakh will also go to lessee. Means we can say that everything is decided at the inception of the lease. When everything is decided, everything is finalized, then there's no problem. And also one thing very much important, he says lessee has the right to continue for a secondary period, which is substantially lower than the market rent. Means the property is given to lessee at a price, but this is the first right with the lessee that he can take it over for the second period also. I mean, it has been given for a period of 10 years, and then lessee have the right to again acquire it at a price which will be lower than the whatever the market rent is there. It will be given at a price lower than that. So in that case, obviously, what it is a right. It is a benefit given to the lessee. So whenever such type of condition exists, we can say that these are all what it is. These are all finance. Don't try to understand meaning from with one-to-one word. Instead, it is better if you will understand the concept, because meaning is somehow looking different, but actual meaning is different. Point number B. Yeah, lessee has the option to purchase the asset which is expired. This is better clear from this example, beta. Mr. A has taken a car on lease for 5 years from XYZ. After 5 years, he has an option to purchase this car for 20,000 only, whereas its market value will be 2 lakh. So obviously, he have been given benefit, and this all has been decided at the inception, at the point when the lease has been given. So indirectly, we say that the asset has already been sold for this much amount at the inception of the lease only. So that he is interested to explain better. You may say that finance lease is not like rental agreement. Finance lease is a lease where we can say somehow different concept is there, but operating lease is just like a rental agreement. If you will see that, because in case of operating lease, these conditions, if these conditions are not there, obviously it is an operating lease, just like a rental agreement. Assume it is clear to everyone. Yes, unearned finance income may be negative or positive because it is not specifically mentioned anywhere that it must be positive or negative. It may be anything. But in that case, it is not an income, it is a loss. Now, this is a good thing. The lease classification is made at the inception of the lease. When we have started the lease, it should be finalized that whether it will be a finance or an operating lease. Now, normally it remains the same. But if in case lessor agrees to change the provisions of the lease, we are not renewing the lease. Instead, terms and conditions are going to be changed. In that case, it may result into different classification, means finance may be converted into operated or operating may be converted into finance. Then we will have to assume that the changed terms being in effect at the inception of the lease, means it is from the beginning on. The revised agreement is considered as a new agreement over its revised term, means we will have to take it forward. We will assume that the things are going to be changed for the remaining period. Change in estimate or change in circumstances do not give rise to a new classification of a lease for accounting. This is not change in accounting estimate. That should be clear to everyone. This is a change in lease term. So let's understand the accounting treatment that I have already started and then left for some time. Accounting treatment is very much easy. Let it be very much clear that in case A has given property on lease to B and risk and reward is already transferred, that means for it's a finance lease. If it's a finance lease, obviously B becomes just like an owner. So it will be an asset for B. He will charge a depreciation on it. Whatever amount is payable by way of lease payments, that is a liability. Just assume the property is given to A on lease, B on lease for rupees 1 lakh per annum for 10 years. So this will be an asset for B at the value that is MLP of lease payment. So he will treat it as its asset. Simultaneously, whatever amount is payable means at the end of first year, only 1 year lease payment is made. Remaining 9 lakh is pending. So that 9 lakh will be the liability for B. Simultaneously, if you see in the books of A, what will happen? A will assume it as a debtor, as he will receive 1 lakh rupees per annum. So it will be his debtor. It will not be his asset. He will not charge deposition rate. He will not do anything for that. So that it meant for finance lease. That has been specifically mentioned. Recognize lease and asset and liability at inception. At which price it is to be recorded? At fair value at the time of inception, at the time when the lease has been given, whatever is the fair value at the time. Or PV, present value of MLP, whichever is higher. Means if the fair value means if we'll sell it in the market, it will be sold for rupees 15 lakh. Or present value of MLP from lessee's perspective. We have already understood what it means for. That means for whatever is the present value of lease payment plus guaranteed residual value, whatever is decided given by whatever guarantee is given by the lessee, that is to be added. So assume it is 12 lakhs. So higher of 2 will be taken as a base for recording it in our books of account as an asset. How to record it? We have to apportion it in our profit or loss account. We have to debit it in our profit or loss account. Apportion lease payment between finance charges and reduction of outstanding liability. This can be understood by way. Yes, we have paid rupees 1 lakh every year. Now this is to be divided between interest and reduction in liability. Now that is to be bifurcated properly. This is all about, if we'll discuss in detail, then this is all about capital budgeting chapter. We have already done it in capital budgeting, cost of capital, how to get the present value, how to allocate it, that is to be done. So it is to be divided in between two. Depreciation is to be charged. Now in the books of lessor, how to treat? He will treat it as a receivable. Whatever the amount he will receive in addition, because he will treat it in its books at net investment value. That we have already discussed what means for net investment is. So if he will receive the amount, obviously it will be more than the amount as per receivable amount, because he will show it at present value. If the total amount to be received during the lifetime will be 12 lakh, during the lease term we have to receive rupees 12 lakh, then obviously its present value will be 10 lakh or less than that. It will not be 12 lakh or more than that. In that case, what will happen? In that case, we will have to, whenever this amount is received every year, obviously amount will be received proportionately out of this amount, whatever is the debtor amount, and the remaining will be assumed as the interest income. And accordingly, lease payments will be reduced from the principal and unearned finance income proportionately. If any benefit comes to us, means ungranted residual value is going to increase. That is basically a expected gain which we are going to think. So if there is any expected gain that the value of our asset will increase at the end of the lease, then it will not be entered in the books of accounts, because this is purely a anticipated gain which is not allowed to be entered in the books. But if we are expecting any loss, then that loss will be recorded now. At the time of lease, we are expecting that the asset can be sold for rupees 5 lakh at the end of the lease. But later on, we come to know that the value of asset has been reduced to 4 lakh. So 1 lakh can be recorded now, and it will be adjusted accordingly. But if the value is going to be increased to 7 lakh, then 2 lakh is not going to be recorded. It is not allowed. It is allowed. And this is purely the old concept, prudence concept, which we have already discussed. If any direct cost is incurred against finance income, then means if any expenses are incurred by us, that will be entered in the books of accounts as an expense, as we are doing normally. In case of operating lease, it is just same as we are giving any property on rent beta. There is no difference at all. As we are giving any property on rent, what we are doing, we are now in case of operating lease, it is for the lessor what it is, and for the lessee what it is. For the lessee, it is he is just a tenant. If he is a tenant, obviously he will enter it as an expense in his books of accounts. So it will be a simple expense for him. On straight line basis, he will write it off unless otherwise justified. Means whatever payment he's giving, he will treat it as an expense. But for lessor, it is somehow different, because for the lessor, it will be as not as a sale. It will be a simple thing that I have given something on rent. The property belongs to me. The asset belongs to me, so there is no problem at all. He will treat it as an asset in his books of accounts. He will charge depreciation as normal, whatever he is doing. Whatever initial cost he have incurred on lease, he will have to write it off as normal, whatever he is doing. So this is a simple thing, whatever we are doing in routine. If whatever the relationship of landlord and tenant is there, that will be like same here, landlord and tenant. As tenant, for tenant, it is just an expense. He will have to write it in his profit or loss account. For landlord, it is an income. He will have to write it to the profit or loss account. Simultaneously, the asset belongs to him. So whatever he will do, he will charge depreciation on that asset as normal. So it will be all same. If any expense is incurred by the landlord at the inception of the lease or later on, he will have to write off that expense in its profit or loss account as normal. Assuming it is clear. Sir, how lease is different from rental? Sorry, sir, if you I have already explained better now. In study material, it is written lower of fair value and present value in books of lessee. Page number 1.75. Just a moment. The query is there. 1.75 page. Yes. Following is the accounting treatment of finance lease in the books of lessee. On the date of inception of lease, lessee should show it as an asset and corresponding liability at lower of fair value of leased asset at the inception of the lease and present value of the MLP from the standpoint of lessee. And what is written in notes? This is correct, beta. Lower of fair value of leased asset at the inception of the lease and present value of MLP. This is correct, beta. That has been written wrongly. It should be there is some lower of. Okay. So assuming it is clear. Now next concept is regarding your sale and leaseback transaction. That meant for A sold a property to B. then taken back it on lease. Taken back means B has given it on lease to A. This is called sale and lease back transactions. Sale and lease back. So how it is to be treated, that we will discuss. So why provision of loss is made in lessor's books as any gain or loss in value accruing to the lessee. Why provision of loss is made in lessor's books as any gain or loss in value accruing to the lessor. We will see what you are saying later on. Just a moment. Sale and lease back transaction. So how it will be treated in the books of in the case of finance and in the case of operating lease, that we have to discuss. In case of finance lease, we have to defer any excess or deficiency of sale proceed over carrying amount and amortize it over lease period in proportion of depreciation on leased asset. Means if sale proceed is 10 lakhs, obviously book value as on that date is 8 lakh. That means so we have earned a profit of rupees 2 lakh. This profit of rupees 2 lakh is otherwise entered in the books now. As we know that whenever we are selling any asset, we are whatever the profit or loss is, that will be allowed in the books of accounts to be entered now. But in case of finance lease, it is not, as it is not a normal lease. If we sell an asset and lease back that particular property, in that case the treatment will be somehow different. He says in that case you will have to amortize it over lease term. Means this 2 lakh will be written off in lease term, whatever is there for the lease back transaction. If we have taken it on lease back for 5 years, it will be written off in 5 years. That is 2 lakh divided by 5. 40,000 will be written every year as an income, as it is our income. Is it clear? In case of operating lease, it is normal, as there is no such point is there. So whatever is the sale price, that will be assumed as A, whatever is the fair value, that will be assumed as B. And we know it very well. Fair value means the value at which it is to be sold. Otherwise, whatever is the market value, that is called fair value. So if sale value and fair value is equivalent, means we have not given any favor to lessee, nor to the lessor. In that case, there's no problem. Whatever is the profit or loss, that is to be entered immediately, as it should be done in normal case. So recognize profit or loss immediately. And then second thing is, if sale value is more than if sale value is assume sale value is 10 lakh. Simultaneously, fair value is also 10 lakh. Then there's no problem. What is your profit or loss will be depending upon sale value minus carrying amount, book value, whatever we are saying, book value. So assume book value is 8 lakh. We have earned a profit of 2 lakhs. So that 2 lakh profit will be entered in the books now. If the book value is 11 lakhs, that is sale value minus book value, that means for there is a loss of rupees 1 lakh. It is to be entered in the books of accounts now. That is it is to be written off. It is to be entered as an income. Is that clear? Is that clear? So in this case, I try to make you clear that there are three values whenever we are talking about these things. One is sale value. That means so the price at which it has been sold. Fair value, that means for the price at which it may be sold according to market value. And book value, that is carrying amount, that means for the value in our books of accounts, whatever the value of asset in our books of accounts, that is book value. Whenever we have to calculate profit, like if the sale value is 1 lakh, book value is 2 lakh, fair value is 5 lakh. In that case, this is to be considered for the purpose of treatment. Otherwise, profit or loss will be calculated by doing this thing only that we are doing in routine. Sale value minus book value. So here we are suffering a loss of rupees 1 lakh. Whether it is to be treated now or it will be deferred. That is the point of concept. That is the point of understanding here. That it will depend upon fair value. If the fair value is equal to the sale value, in that case, we have to treat it in its books now. If fair value is different, what you have to do? If sale value is more than fair value, it means so we have not given any favor in that case. We have not given any favor in that case. Instead, we have sold it at a more price. So in that case, whatever excess over fair value, we have to amortize it over a period for which asset is expected to be used. Means the period for that particular asset is to be used. If the sale value is 8 lakh, fair value is 5 lakh, it means for whatever is the profit, how much is the profit in this case? Tell me better. How much is the profit? Profit is always equal to sale value minus book value. Sale value is 8 lakh, whereas book value is 2 lakh only. So the profit is 6 lakh. But this profit is divided into two parts. One part is the profit, which is sale value minus one part is the excess of fair value over sale value. That is excess of fair value, sale value over fair value. That is 8 lakh minus 5 lakh. So 3 lakh will be amortized for the period for which we are expecting the life of the asset is. If we are expecting that the life of the asset will be 10 years, so this 3 lakh will be written off in 10 years. And the balance rupees 3 lakh will be entered in profit or loss account now. Just read it once and then I'll take some examples in Hindi also. If loss is compensated by future lease payments, there are three values. First of all, understand it: sale value, book value, and fair value. Normally, we are considering sale value and book value only. We are not going to consider fair value in normal cases. But here, fair value is also important. Fair value means the price at which it is to be sold according to the market price. So, case 1, sale value is 8 lakh, book value is 4 lakhs, fair value is 8 lakh. So in this case, there is no favorism. It is very much clear because market value and sale value both are equivalent. Both are 8 lakh. So in this case, if we have suffered any profit or loss, that is to be recognized immediately. That is to be recognized immediately. That has been mentioned. So whatever the profit or loss is, how to get the profit or loss? 8 lakh minus 4 lakh. This minus this. So 4 lakh is your profit. It is to be entered in profit or loss account, credit side. बेटा हिंदी में समझ लो कि अगर फेयर वैल्यू और सेल वैल्यू बराबर है, इक्वलेंट है, तो आपको वरी करने की कोई जरूरत नहीं, बिकॉज यहाँ पर कोई फेवरिज्म नहीं हुआ, कोई बायस नहीं हुआ. तो उस केस में तो हम लोगों ने जो भी कैलकुलेट करना है प्रॉफिट या लॉस तो कैलकुलेट कैसे होता है, वो तो पुराना मेथड है आपका, जैसे आप पहले करते थे कि बुक्स में आपके एसेट की वैल्यू क्या है, वो 4 लाख है और आप कितने का सेल कर रहे हो, 8 लाख का. तो 8 माइनस 4 लाख आपका प्रॉफिट आ गया. अगर यहाँ पर बुक वैल्यू जो है वो 10 लाख होती, तो उस केस में क्या हो जाता, 8 लाख माइनस 10 लाख, आपको 2 लाख का लॉस हो जाता. बड़ा इजी है बेटा, बहुत इजी है, डोंट वरी. तो 2 लाख का आपका लॉस हो जाता. तो ये लॉस जो है आपको प्रॉफिट लॉस अकाउंट में इमीडिएटली डाल दो. दैट्स इट. पहला पॉइंट तो ये हो. दूसरा पॉइंट, सेकंड पॉइंट, इफ सेल वैल्यू इज 8 लाख, फेयर वैल्यू इज सेल वैल्यू इज मोर देन फेयर वैल्यू. सेल वैल्यू इज मोर देन फेयर वैल्यू. Sale value 8, book value 4, fair value 6 lakh. Now what is to be done? In this case, how to get the profit or loss? The concept is again same, 8 lakh minus 4 lakh. That is 4 lakh only. But this 4 lakh will not be written off immediately. Instead, it will be divided into two parts. Here, a bias is made. An asset of rupees 6 lakh has been sold for rupees 8 lakh. So asset of 6 lakh is sold for rupees 8 lakh. There is a profit which is not an actual profit of rupees 2 lakh. This is not actual profit. This is a profit created by us only. Actual profit should be only 6 minus 4. Whatever is the market value, we have to sell the asset at that price. Obviously, in that case, the profit will be only 2 lakh. You may see that the market value is 6 lakh. But it has been sold for rupees 8 lakh. So actual profit is only rupees 2 lakh, if we'll see. But profit is created more by doing this thing. 8 lakh, that is the sale value, minus fair value 6 lakh. This 2 lakh profit is shown as an extra profit only. This is not the actual profit. So how to treat this 2 lakh that we are discussing? This 2 lakh will be recognized immediately in profit or loss account. There is no problem. How to treat this 2 lakh? This will be amortized for the full life. If the life of the asset is, we can't recognize it now. So this is to be amortized for the life of 5 years. If the life of the asset is 5 years, if the asset life is 10 years, it will be written off in 10 years. So all that is to be done. Is that clear? बेटा इसमें हिंदी में बता देते हैं कि 8 लाख रुपए की सेल वैल्यू है, 4 लाख रुपए इसकी बुक वैल्यू है एसेट की, और 6 लाख रुपए की फेयर वैल्यू है. तो बड़ा क्लियर है कि इस केस में हम लोगों ने जो 6 लाख की प्रॉपर्टी है उसको हम लोगों ने कितने का सेल कर दिया, 8 लाख में. तो हमने 2 लाख रुपए का एक जो प्रॉफिट हमारा नहीं है उसको हमने किताबों में डाल दिया, वो गलत हो जाएगा. तो इसलिए उसको हम लोगों ने धीरे धीरे राइट ऑफ करना है, क्योंकि हमने लीज बैक तो कर ही लिया, प्रॉपर्टी तो हमारे पास दोबारा आ ही गई है. तो उस केस में हमें इस प्रॉफिट को भी अपने धीरे धीरे राइट ऑफ करना. तो 8 लाख में से 4 लाख माइनस करेंगे, माइनस करके जो आपका प्रॉफिट हो गया ये टोटल 4 लाख का, इसमें से 2 लाख का प्रॉफिट तो आपका इस वजह से हो रहा है बिकॉज आपने इसको 6 से ऊपर बेचा है. तो जितना आपने एक्सेस अमाउंट कमाई है वो 2 लाख रुपए जो आपने एक्स्ट्रा अर्न करी है उसको आप बाद में राइट ऑफ करोगे. जो 2 लाख रुपए आपका जेन्युइन प्रॉफिट है वो तो नजर आ ही रहा है कि 6 लाख रुपए का एक्चुअल में एसेट सेल होना था, बुक्स में उसकी 4 लाख की वैल्यू थी, तो 2 लाख रुपीज का तो एक्चुअल प्रॉफिट नजर आ ही रहा है. उसको इमीडिएटली डाल दो, बाकी जो प्रॉफिट है उसको कैरी फॉरवर्ड. बेटा अगर क्लियर हो रहा है तो लिख के भेजो, नहीं क्लियर हो रहा तो बताओ, सो दैट आई कैन हेल्प यू। कॉपी भी कर सकते हो, नोट डाउन कर सकते हो। बिकॉज इट इज बेटा, ये प्रॉफिट ही है कार्तिक, इट इज अ प्रॉफिट, जस्ट वे ऑफ राइटिंग ऑफ इट इज डिफरेंट। We are going to enter it in your profit or loss account, but it will be in installments. It will be in 5 years. Why it is done? The reason is very simple, because there may be some bias, there may be some favorism which has been done in this case, because we are going to take it back on lease also. So if we have sold it and we are not taking it back on lease, there's no problem at all. If we have sold any asset which has been earlier leased by us, but we are not taking it back on lease. Now, see one thing here, lessor is going to get it back on lease, which is purely not logical. If lessor is selling an asset to someone, anyone, then he is not interested to get it back on lease, because obviously it will be a costly product in that case. You may think the rent is always costly in comparison to the ownership. So due to that reason, all that is done. Amortization is done just not to consider, not to show extra profits in your books, which is not your, which is not actually yours. प्रॉफिट आपका नहीं है, आप किताबों में शो कर रहे हो, वो गलत हो गया ना। प्रॉफिट तो आपने फेक प्रॉफिट क्रिएट किया है। फेक प्रॉफिट कैसे क्रिएट किया? आपने उसको बाद में लीज पे भी तो खुद ही ले लिया, तो यहाँ पर फेक प्रॉफिट क्रिएट हो जाता है। तो फेक प्रॉफिट को अगर आप शो करते हो तो आपकी बुक्स ओवर शो करेंगी प्रॉफिट, जिस वजह से लोग आपके शेयर्स में इन्वेस्ट करेंगे, आपकी जो प्राइस, आपकी जो वैल्यू ऑफ शेयर है वो बढ़ जाएगी। तो उसको रोकने के लिए ऐसा किया गया। Gomati, it will be written off according to the life of the asset. If the life of the remaining life of the asset is 5 years, it will be written off in 5 years, or whatever it is, it will be written off accordingly. So coming back to third point, if A is less than B, that is sale value is less than here fair value, means it is sold at a lower price. Then what you have to do? If loss is compensated by future lease payments at below market price, then defer it and amortize in promotion to lease payment over expected period, or else recognize it immediately. What it means for? Sale value is 10 lakhs, book value is 8 lakhs, fair value is 7 lakhs. No, fair value is 7 lakh. Sale value is 17 lakhs. Fair value is 17 lakh. So the asset of 17 lakh is sold for 10 lakh only. Why? Why we have given that benefit to a particular person? An asset of 17 lakh is given to a person for rupees 10 lakh. So what do you have to do in this case? If loss is compensated by future lease payments at below market value. Now what is loss? So see here, what is the loss? If A is less than B, if loss is compensated futurely at below market value, then defer it and amortize it. I would like to discuss it according to the information given in your IC module. Your IC module for this point. जितना समझ लग गया ना आपको इस ES में, उतना मच मोर देन सफिशिएंट रहेगा आपको, बिकॉज एग्जाम में अगर क्वेश्चन आता है तो इसमें बहुत सारे पॉइंट्स हैं जो हम डिस्कस कर रहे हैं। तो अगर आपको 2-4 पॉइंट्स, 5 पॉइंट कम भी समय लगे पर बाकी समय लगे और उसी में से पॉइंट आ जाता है तो आपका तो मार्क्स पक्के। इट इज नॉट वरी कि हाँ जी भी हमें 100% समय लगा, हमें 90% समय लगा तो क्या होगा। वैसे तो अगर अभी 90% समय लगा, इसको रिव्यू करेंगे तो 100% हो जाएगा। तो दिस इज नॉट ए बिग वरी फॉर यू। See sale and lease back transactions in your IC module. It is somehow lengthy. Due to that reason, I have given a brief details also. Yeah, that we are discussing. These are the cases. First case is discussed. Second case is discussed. Sale value is more than fair value. That we have discussed. Sale value is less than fair value. Profit or loss if should be recognized immediately. If there is any profit or loss, that is to be recognized immediately. However, if the loss is compensated by future lease payments, what is profit or loss? That should be recognized. That I am going to tell you. What is the loss or profit? That is obviously according to the book value. We have not to consider anything else. That I am interested to discuss with you. That here loss is not 10 minus 17, it is 10 minus 8, it is 2 lakh only. So the loss is 2 lakh. It is to be recognized in profit or loss account immediately. There's no problem. But in case the lease payment is 10th on only against, if I'll take it from someone else on lease, if the same property is taken from someone else on lease, it will be 4 rupees 50th on. But I have been given 4 rupees 10th on only per annum. So I have been benefited by rupees 40th on per annum. आपने एक प्रॉपर्टी को सेल किया किसी को, उसने आपको लीज पे दे दिया वापस। अब अगर वही प्रॉपर्टी आप कहीं और से लीज पे लेते तो 50,000 रुपीज उसका लीज पेमेंट होता, बट आपको ये कितने की मिल गई 10,000। तो आपको इस केस में 40,000 का प्रॉफिट हो रहा है हर साल। तो इस केस में थोड़ी सी ट्रीटमेंट डिफरेंट है। दैट आई एम इंटरेस्टेड टू स्पीक। इट शुड बी डेफर्ड। इन दैट केस इट शुड बी डेफर्ड and amortized in proportion to the lease payment over the period for which the asset is expected to be used. अब इसका मतलब ये कि 10,000 रुपीज आपको पर एनम आने वाला है 1 2 3 4 5 years तक आने वाला है। एज्यूम कर लो, assume that it will be received to you for 5 years. So 1:1:1:1:1 ratio is there. So whatever the loss of 2 lakh is there, that will be written off in 5 years. That is 40,000 per annum. It will not be written off immediately, it will be written off in installments. Beta, it is very simple that if we are suffering from any loss, that is to be entered in the books of accounts now, there is no problem. But in case I have been given some bias also, some favor also, this is all about market tendency. My market price is 17 lakh, but now a time it is not going to be sold at 17 lakh. I will have to sell it at 10 lakh because I require the money. And the person who is acquiring it telling me that I'll pay only 10 lakh. Now I'm not able to get 17 lakh from the market today. It will take some days. Just assume I'll have to give it on credit to someone, only then I'll get 17 lakh, or I'll have to sell it to Delhi, I'll have to sell it to some other state, or there may be any problem. So I'll have to sell it at rupees 10 lakh now, and this is the only condition that I have to sell to this particular person only. This is a problem. This will be the situation when we have to sell the asset. So if we have suffered any loss in that case, that will be entered in the books of accounts now. Even if we have taken it back on lease, and that is our problem, that we have taken it back on lease. There is no such bias which has been done here, because if sale value is more than fair value, then there is a bias. If sale value is less than fair value, then there's no bias, because I am taking it back on lease. But in case it has been taken back at a lower lease payment, that means for we have been biased by that person. So in that case, obviously, I have made a bias. Due to that reason, he is reverting me in a bias. So both persons are doing bias to each other. अगर एक 10 लाख की चीज हम लोग, एक 17 लाख की चीज हम लोग 17 लाख की किसी को 10 लाख में सेल कर रहे हैं, और वो पर्सन उसे हमें वापसी में कुछ 50,000 के बदले हमें 10,000 के रेंट पे दे रहा है, इसका मतलब ये कि यहाँ पर प्रॉपर बायस हो रहा है। तो अगर बायस हो रहा है तो हम लोग फिर जो हमें लॉस हुआ है उसको इमीडिएटली किताबों में रिकॉग्नाइज नहीं करेंगे, दैट विल बी रिकॉग्नाइज इन इंस्टॉलमेंट्स इन प्रोपोर्शन टू द अमाउंट। इज दैट क्लियर? Oh, so because of this arrangement, the selling price is high to avoid such unearned profit. Exactly, beta. Our loss book value is 8 lakh and sale value 10 lakh, profit 2 lakh. No, loss is there. Our loss book value is 8 lakh. Okay, sorry. It will be 12 lakh. Good consideration. Kiran, you are intelligent from this point of view, I would like to say, because when we are doing the questions, this type of problem comes to us while taking examples from our side. This type of problems come. So there is a loss of 2 lakh. Exactly. Isn't 2 lakh? It is 2 lakh profit. Harsh, Akashni, very good. Your keen consideration is always required. Very good. I think it is clear to everyone. Now we are coming to disclosure requirement, which is always easy. Just we have to remember it that this type of disclosure is required in this case. Disclosures are very simple and sober. We have already understood in case of finance lease how to disclose. We have to disclose that whatever is the leased asset, we have to disclose it separately from our owned assets. Whatever assets are with us, means some assets are with us whose ownership is with us. Some are leased assets which are taken on finance lease basis. So both has to be kept separately. Net carrying amount in the balance sheet date is to be shown. Reconciliation is to be shown. Contingent rent, whatever it is that is mentioned here. So in operating lease also we have to show all that. If there is any doubt, I'll take it on Monday. There's no problem. So I think it is clear. So I think that you need a break after this so that we can understand the next years in detail with a fresh mind. So after this break, we will start with AS20. Till then, refresh yourself, go and get some water, have some break so that you should be fresh to understand the next AS, which is very important. Come back after the break of 10 minutes. Sir? Welcome back after the break. Assumed you are all fresh now to go for the next lecture. Yes, yes. I have a class tomorrow also. Exactly right, Akashnil. You are right. Very good. Very good. So let's start with the next AS bit. First of all, I would like to have a brief discussion of this AS, and then we will go into the detail wherever required. So I'll refer both the AS simultaneously, both the materials simultaneously. Subject. First of all, I would like to start from my glance. This glance is basically giving a brief introduction of each and everything. But for details, you must have to refer the ES. It will give you the brief understanding. So let's understand it. ES 20, we are talking about. ES 20, the name of the ES is, what is the name of the ES? So first of all, that is always required, which is not mentioned here. I would like to show you the name also. Yes, earning per share. EPS we are calling. So ES 20 is basically earning per share. And the concept is very simple to describe the principle for determination and presentation of EPS. How to determine and how to present earning per share. But why we are doing it? Actually, we people we are the shareholders of of a company. What we need is we are interested to compare the EPS of one company with the other, so that we can understand which company is more profit making for us, which company is more beneficial for us. If I'm a shareholder of Airtel also and the Reliance also, I would like to compare the EPS of both the companies to check it out which company is more profitable for me. And that profitability can be checked by EPS only, because EPS meant for what? How much is the earning per share? Means against one share, how much a company is earning. So if a company is earning more, obviously if profits are more, obviously I'll get more as a dividend. If I'll not get more as a dividend, even then my future prospect will be good, because in whatever the more and more reserves are with the company, whatever more and more profits are with the company, obviously that belongs to the shareholders only. So due to that reason, it will be always beneficial. Second thing is, there may be a concept that we are interested to compare. We means we people means here shareholders as well as the management or the key personals also. They are also interested to check it out, that what is the EPS of current year, what is the EPS previous year, what is the EPS of previous to previous year, so that they can check it out the performance of the company for more, for further improvements, for further forecastings, for further decisions, all that. So two things are there. One is comparison of performance among different enterprises for the same period, and among different accounting periods for the same enterprise. If we'll see the meaning of EPS in detail, that is normally known to everyone, that is earnings for a particular period divided by number of equity shares. This is general meaning. As a layman, if we will see, this is called EPS. If a company's profit after tax is 10 lakh crore rupees, and company have 10 lakh shareholders, that means for it is 1 lakh 1 crore per share. So this is the EPS general meaning. Okay, sorry, notes are not visible. Just a moment. I would like to share the screen. Just a moment. अशोक जी, I need your help. वही उसको दिखाने के लिए प्रॉब्लम क्या है कि मैंने ना उसको मिनिमाइज किया ना, जब अपनी क्या नाम है जूम मीटिंग को मिनिमाइज किया तो वो नीचे कर दिया था मैंने। अब वो मुझे ना इसको बंद करके दोबारा ऑन करने पे तो आ जाएगी, मुझे लगता है नीचे से ऊपर आ नहीं रही अदरवाइज। क्या किया जाए बताओ, आप कुछ गाइड करो। ना मैं नीचे करी थी, मिनिमाइज करी थी और नीचे को कर दी। अब वो ऊपर नहीं आ रही। पीपीटी को नहीं, स्टॉप करने की तो ऑप्शन नहीं है ना मेरे पास। एक प्रॉब्लम तो ये जूम का ना, मेरे पास वो जो लिंक है ना, वो मैंने नीचे को कर दिया था, वो अब ऊपर नहीं हो रहा। दिस इज अ प्रॉब्लम। कंट्रोल प्लस टैब, नहीं उसको दबाने से वो नहीं आ रहा ना। नहीं, पीपीटी तो मेरी जो है ना वो मैंने करी नहीं ना, शेयर नहीं करी हुई। अभी तो मैं ही आ रहा हूँ, वो शेयर नहीं करी हुई ना। तो मुझे लिंक को ब्रेक करके दोबारा से ऑन करने में मुझे लगता है काम बन जाएगा। कर दूं? हाँ, ब्रेक डाल, 2 मिनट की ब्रेक डाल दो और क्या। 2 मिनट की ब्रेक के बाद वापस मिलते हैं, 2 मिनट की ब्रेक जस्ट। We are discussing about EPS. So there was some technical issue. Due to that reason, we have to go for a break of 1 or 2 minutes. Don't worry. Now, I'm just discussing with you that how to discuss about the EPS. So EPS is clear as a layman. Now I would like to go according to AS. According to AS, there are two types of EPS. One is basic EPS and second one is diluted EPS. So what is basic and what is diluted, that we have to understand better. Whenever we are talking about basic EPS, that means for first of all, one thing should be clear that we are talking about equity shares only. We are not talking about anyone else. We are not talking about preference shares or any other shareholders. We are talking about equity shares only. Now, talking about basic EPS, that means for what? See, here it is. We have to calculate the net profit or loss for the period attributable to equity shareholders. So what it is? Everyone must have to understand this thing. What is the profit attributable to the equity shareholders? First of all, we have profit before interest. PBI we can say. Just assume it is the amount. So this is profit before interest. Less we have to make interest is to be deducted. Whatever is left minus this is profit before tax. Minus we have to make tax. Whatever tax is to be deducted. This is profit after tax. So this profit after tax is a profit which is normally there may be some statutory reserves also. If any particular allocation is mandatory in the given case, it is to be done. Minus mandatory allocation, if any is required, that is to be deducted. Allocation to any reserve. So the remaining is the amount available for equity. Yeah, one more thing is to be deducted, sorry. Mandatory allocation and minus preference dividend. That is also to be deducted. And the balance left will be the amount available for equity shareholders. So this is the profit available for equity shareholders that we have to do. Note it down with you. Note it down with you. Noted. So he is saying it net profit or loss for the period attributed to equity shareholders. How to get it? Net profit or loss, whatever it is, minus preference dividend minus tax on distribution, whatever it is, that is to be deducted. Now, what is number of shares? How to get the number of shares? Here, number of shares meant for weighted average number of equity shares outstanding during the period. For that purpose, if we will assume that at the beginning of the year, we have 10 lakh equity shares at the beginning of the year. Now, what happens? We have issued some more shares during the year. On 1st of September, that is after 6 months, we have issued 1 lakh shares. So in this case, 10 lakh shares are outstanding for full year. We will multiply it with 12 months. 1 lakh shares are outstanding for 6 months. Now, whatever is the total, that may be divided with 12 to get weighted average number of shares. To get weighted average number of shares. So that is the way how you can get it. Assume shares. We are talking about equity shares. Again, same thing. Equity shares outstanding on 1st of April. Whatever the number of equity shares are there, equity shares issued during the year. These are to be added. So these are assumed these are issued on 1st of September 2021. These are to be added, but we have to get the weighted average on the basis of the time period. So we have assumed that these are 10 lakh shares and these are 1 lakh shares. So how to get the weighted average? 10 lakh into 12 plus 1 lakh into 6 divided by 12. So this is the weighted average number of equity shares. After the break, I'm going to repeat whatever we have discussed in Hindi also. सबसे पहले तो हम लोग बेसिक ईपीएस की बात कर रहे हैं. बेसिक ईपीएस निकालने के लिए सबसे पहले आपको प्रॉफिट चाहिए. हमारे पास जो प्रॉफिट बिफोर इंटरेस्ट है उसमें से इंटरेस्ट माइनस कर दो. प्रॉफिट बिफोर टैक्स आ जाएगा, टैक्स माइनस कर दो, आफ्टर टैक्स आ जाएगा. कुछ मैंडेटरी एलोकेशन हो सकती हैं, कोई आपने किसी रिजर्व को ट्रांसफर करना है स्टैट्यूटरी रिजर्व को, वो जरूरी है, कंपल्सरी है, वो एलोकेशन कर दो. प्रेफरेंस डिविडेंड पे कर दो. Whatever is left, that is the amount available for equity shareholder. अब इसको डिवाइड करना है हमें, बिकॉज ये तो आ गया अमाउंट अवेलेबल फॉर इक्विटी शेयर होल्डर्स. ये हमारी अर्निंग अवेलेबल फॉर इक्विटी शेयर होल्डर्स है, प्रॉफिट अवेलेबल फॉर इक्विटी शेयर होल्डर्स. डिविडेंड ये देंगे ऐसा नहीं है. इसका मतलब ये कि हमारे पास इतनी अमाउंट अवेलेबल है उनके लिए, दें चाहे ना दें वो हमारी मर्जी. उसके बाद हमने निकालना है, उसको डिवाइड करने के लिए जो नंबर ऑफ शेयर्स निकालने, वो हमने वेटेड एवरेज नंबर ऑफ शेयर निकालने. वेटेड क्यों निकालने? वैसे तो सिंपल बात है कि हम लोग इक्विटी शेयर्स निकाल सकते हैं जनरली कि हमारे पास 1 अप्रैल को 10 लाख शेयर्स हैं तो बात खत्म, कोई दिक्कत नहीं है, 10 लाख से डिवाइड कर देंगे प्रॉफिट अवेलेबल को. लेकिन अगर ऐसा नहीं है, हमने ड्यूरिंग द ईयर कुछ चेंजेस करी हैं या कुछ और प्रॉब्लम्स हैं, तो वो सारी चीजों को एडजस्ट करना पड़ेगा. हाउ टू एडजस्ट दैट वी आर गोइंग टू डिस्कस नाउ. दैट विल बी ऑन केस टू केस बेसिस. तो व्हाट आर द केसेस दैट आई एम डिस्कसिंग? फर्स्ट केस इज कि मैंने शेयर्स जो हैं ओपनिंग में जो 10 लाख शेयर्स हैं, उसके बाद मैंने 1 लाख शेयर्स और इशू किए हैं ड्यूरिंग द ईयर. सो इफ आई हैव इशूड सम शेयर्स ड्यूरिंग द ईयर, दैट विल चेंज माय कंसेप्ट. So how to get it? Very simple. 10 lakh shares are outstanding for 12 months, so multiplied with 12. 1 lakh shares are outstanding for 6 months, multiplied with 6. We are interested to convert this average into 12 months, so divide by 12. Is that clear? So it is 10 lakh 50,000. 10.5 lakhs. Is that clear? Note it down. समय लग गया तो नोट डाउन कर लो. Noted? Now, one more example of calculating weighted average number of shares. I have 1 lakh shares outstanding on 1st of April 21. I have 1 lakh shares outstanding, which are fully paid up. And also 1 lakh shares which are partly paid up. Fully paid up rupees 100 each. Partly paid up rupees 50 each. Now in that case also we have to calculate the weighted average number of shares by this way. 1 lakh into 100 plus 1 lakh into 50 divided by 100. So 1 lakh into 100 divide plus 1 lakh into 50. So this is all understanding. There's no specific formula which I'm interested to discuss with you. I'm interested to discuss with you concept that you must have to calculate the weighted average number of shares with a logic. Weighted average number of shares. We may take one more example. On 1st of April 2021, I have 1 lakh shares at the rate of rupees 100 each. Another fully paid up shares are there. Those are 10th shares at the rate of rupees 20 each. Because there may be a chance that different type of equity shares are issued because there may be different categories in equity shares also. On 1st of September, I have issued 10th equity shares at the rate of rupees 10 per share. These are partly paid up. The face value is 100 per share, but we have issued it for rupees 10 each. So there may be such chances also. In that case, what we have to do is get it up yourself. You may get it. And you have to calculate fast beta. One lakh to be multiplied with 100 for 12 months. 10th one to be multiplied with 20 for 12 months. Plus 10th one to be multiplied with 10 for 6 months. So all are divided by 12. And a price is also to be fixed on the basis of which we have to do it. That price is also to be finalized. So in this way we will calculate. Because here price is also to be made equivalent for all the shares. Also we have to consider the time, because time is also differentiated in this question. So weighted average number of shares will be carried in this way in this case. Is that clear? Noted? Then tell me. Noted? Everyone? So these are the weighted ways how we can do weighted average number of shares. Assuming it is clear to everyone. No waiting for no time waiting factor is there. This is all about the understanding. So here it is mentioned time weighting factor in your AS, but I am not giving any importance to this time weighting factor because this is always technical to calculate. The way I have given you the concept, that will be easy. Sir, how would we finalize the amount of share? As you said that you may take any one base beta, and the base is normally given in the question. In maximum time, there will be only single face value in the question. But if the face value differs, then we have to consider accordingly. Otherwise, normally there is only single face value. Yeah, shares may be partly paid up. You may also take it as an example that here this is 20 paid up, this is partly paid up, and this is 20 only. And this is also partly paid up, this is 10 only. The face value is 100 also. In that case, there is no problem at all. Otherwise, in case there is a problem, they must have to give the concept. They must have to clarify it because this is this I have taken as an advanced query, you may say example, but in normal cases, such type of examples are not there. In that case, he will also tell you that this is a concept. Weighted number of shares that you may calculate, there's no worry, whatever it is. I'm just giving you the idea. Now we are talking about the most important calculation, that is diluted EPS, which is comparatively very, you may say, logical and understandable. For that, we have to understand some new things which I would like to discuss with you. Better tell me one thing. If I have equity shares with me, it's okay. Have you listened about those debentures or preference shares or securities which are later on converted into equity shares? Have you listened about this? He says that I am issuing convertible debentures. Convertible debenture. Have you listened about the word convertible debentures? Convertible debentures meant for those debentures which will be later on converted into equity shares. So those are named as convertible debentures. These are called potential equity shares. These are called potential equity shares. Those which are later on converted into equity shares, today they are in some other form. They are in the form of securities, debentures, etc. But later on, after a certain period of time, whenever company thinks feasible, company may give them the option. And that may be optional also. That is not mandatory. That may be optional also. That debenture holders may convert their equity shares, debentures into equity shares whenever company will give them the option. So that may or may not. That is up to their choice. So these are called potential equity shares. First of all, you have to understand potential equity shares. I think it is clear. I think it is clear to everyone. Now, here what we have to do. He says, first of all, read it, then I will do it with some example. He says, interest and dividend recognized in the period relating to diluted potential equity share, including adjustment for changes in tax expenses. After tax amount, other changes resulting in conversion of diluted potential equity shares to be made. Now, I would like to take an example for you. I'm just reading it for your understanding. Now, understand it by practical example. Just assume my profit before interest is 10 lakh. Big example will create more problems, so I am taking an easy example. Now I have to pay interest to convertible debentures. Rupees 1 lakh. That has been deducted. Now this is 9 lakh. Out of that, tax is there. Tax is 2 lakhs. So 7 lakh is the profit available for equity shareholder. That we have calculated earlier also. Now what is the new thing? Here we have to reverse it. Whatever the profit available for equity shareholders, that is 7 lakh, take it as it is. We have to add back tax in it, that is 2 lakh. It is 9 lakh. Add back interest, assuming these debentures are converted into equity share. If these debentures are converted, what will happen? If these debentures are converted into equity shareholders, obviously in that case, this interest is not required to be paid. So we have to add back the interest. So this 1 lakh is to be added back. Profit is 10 lakh. Now on this 10 lakh, tax is to be paid minus tax. Whatever the tax is required to be paid, it may be 2 lakh 20,000 in this case, because tax will also change. It will be on 10 lakh. Earlier it was on 9 lakh. Assume on 9 lakh it was 2 lakh, but in 10 lakh it is 2 lakh 20,000. 7 lakh 80,000 is the amount available for equity shareholders. So this is called, this is to be calculated as a earning available for equity shareholders in case of diluted EPS. In case of diluted EPS, this is the earning available for equity shareholders. Profit for equity shareholders, add back tax, whatever is the amount, add back interest, whatever is the amount, minus tax, revised. Amount available for equity shareholders and potential equity shareholders. So it is for normal and potential equity shareholders both. Note it down. You may note it down. Once noted, confirm me so that I can proceed further. Meghna, Aditi, Harsh, Aditi. Very good, beta. Very good. Fast, fast, fast. Shabash. If we provide mandatory allocation, then it also added back in case of diluted. Exactly, beta. In this case, preference dividend is also to be added back. Space is less, or you may say whatever is deducted, that is to be added back. If preference shareholders are already deducted, preference dividend, that is to be added back. Any allocation to reserve is also to be added back, or anything else, whatever is done, that is to be added back. Assuming everything is noted, then it is to be divided by weighted average number of equity shares that would have been outstanding if all diluted potential shares are converted into equity shares. That meant for what? In this case, No, Karthik, it is not yet converted. If it has been converted, we are assuming it. And we are assuming that it has been converted at the beginning of this year only. So due to that reason, we are treating it. We have assumed that it has been converted at the beginning of the year. So due to that reason, we are reversing the interest and we are treating all the things as normal. We are not treating it as an expense. We are this is just for calculation. It is not to be changed in the books of accounts. This is for the purpose of calculating diluted EPS only. Diluted EPS is to be calculated because AS20 made it mandatory to calculate it. We are not calculating at our own end. It is made compulsory by the AS20 that we must have to calculate diluted EPS in case there are some potential equity shares available in your balance sheet. If there is no potential equity share available in the balance sheet, basic EPS is sufficient. So how to calculate the weighted average number of equity shares? That we have already taken an example. I would like to go for the same example. Like in this example, 1 lakh fully paid up shares, 1 lakh partly paid up shares are there. And we have done it in this way. Now I'm going to take it for diluted EPS. In that case, assume equity shares in our books of accounts are 1 lakh at the rate of 100 each. Now we have debentures also in our books which can be converted into equity shares because these are convertible debentures. If these are not convertible debentures, there is no need of doing this. These are worth rupees. This is 1 crore. These are worth rupees 10 lakh only. Whatever is their face value, whatever it is, the number of debentures that is not considering, that I'm not considering. These 10 lakh can be converted into equity shares. If we will convert them at face value, how many equity shares will be converted? So if we will convert it into equity shares of rupees 100 each, in that case, 10,000 equity shares will be there. So these are the potential equity shares. 10 lakh, that is the value of debentures divided by face value of equity shares. So this is 10,000. Now we have to calculate the weighted number of equity shares. So how much it is? This is 1 lakh plus 10,000. So these are 1 lakh 10,000. These are 1 lakh 10,000. So whatever is the profit available for potential and other equity shareholders, that will be divided by weighted number of equity shares. Note it down. How the AS is going on? Is that simple or difficult? Till now, you are feeling easy with it, na? Noted? Could we proceed? Assumes it has been noted by everyone. May I proceed? If we issue another lot of equity shares, then we done as we done previously. Exactly, beta. Exactly. There's no problem. It will be done as it is. Now, once an restatement of basic and diluted EPS, he says when number of equity or potential shares outstanding changes. Why it has been changed? Due to issue of bonus shares, right shares. What is bonus shares? Those shares which are given free of cost to the existing shareholders are named as bonus shares. So if we issue some bonus shares, obviously it is not issued on 31st of March. Before finalizing books of accounts, we have issued some bonus shares. In that case, we have to restate our basic and diluted EPS. If we issue some right shares, that means for the shares which are issued at a lower price in comparison to the market price of equity shares, and these are given to the equity shareholders only, existing shareholders only. Share supplements for earlier our shares were worth rupees 100 per share, face value was rupees 100 per share. We have splitted one share into 10 shares of rupees 10 each. Earlier there was there were equity shares of rupees 100 each. Now we have splitted our one equity share into 10 equity share of rupees 10 each. This is called share split. Or consolidation meant for earlier we have shares of rupees 10 each. We have consolidated 10 shares of rupees 10 each into one share of rupees 100 each. So that means for this is a consolidation after balance sheet date, but before approval of financial statements. Why? The same concept is there which we have discussed earlier also in our AS, that if something has been done before approval of financial statements, then EPS calculation for that period and any prior period to be based on new number of shares. Then we have to recalculate the EPS. We have to calculate the EPS once again. EPS not to be adjusted for transaction occurring after the balance sheet date and not affecting amount of capital used for earning profit. So that it means for EPS not to be adjusted for transaction occurring after the balance sheet date and not affecting amount of capital means otherwise EPS is not going to affect. Just due to the reason of these changes in shares, it will be considered. So if shares are changed, number of shares, then we have to consider. Other changes are not to be considered. I think I am able to clear you. Owner shares, right shares, share split, consolidation of share. Options are employee stock option plans. We have given options to our employees that they may take our shares at a lower price in comparison to the market price. And that will be kept by them for a certain period. We will do it in a chapter. There's no problem because that is also given to me. I will discuss it with you, employee stock option plans, which are very good. So in that we will discuss in detail. Contingently issuable shares, which may or may not be issued depending upon occurrence or non-occurrence of one or more uncertain future events, are called contingently issuable shares. Means these are the shares which have been given to someone as a guarantee. It will be issued only on occurrence or non-occurrence of one or more uncertain future event. So these are called contingently issuable shares. Anti-dilutive item which cannot be diluted. You may treat it in. I would like to discuss in your application of accounting standard because it's something new. You haven't covered it earlier. Anti-dilutive. We have discussed about the diluted equity shares or the potential equity shares. So it is just correlated with it. So potential equity shares are anti-dilutive when their conversion to equity shares would increase EPS from continuing ordinary activities or decrease loss per share from continuing ordinary activities. What it means for? He says these are anti-dilutive when their conversion to equity shares would increase EPS or decrease loss per share. Either it will, if it will change our, if potential equity shares are converted into equity share and due to conversion, our EPS will change. Either it will increase or our loss will decrease from continuing ordinary activities. Whatever our continuing ordinary activities are there, its profit or loss is changed. Then these are called anti-dilutive equity. Then these are called anti-dilutive potential equity shares. The effect of anti-dilutive are ignored in calculating diluted EPS. We are ignoring it as we are doing it. In considering potential equity shares are dilutive or anti-dilutive, each issue or series of potential is considered separately rather than in aggregate. Means if there are various issues, we have to treat it separately. This is basically we are not going to go into depth in this case. He has made it very clear that for calculating potential equity share, you need not to worry whether it is going to affect our profit or loss. Otherwise, there may be many changes also. When debentures are converted into equity shares, there may be some other changes also. Not only interest is changed, some other changes may also be there. But he says those are not to be considered. Those are not required to be considered. We need to consider only the thing whatever we have discussed till now. So this is all about this. Dear Aditi, Beta, what I am saying, what will happen if debentures are converted in the middle of the financial year instead in the beginning? Let it be very much clear. We are not converting it now. This is just an assumption that if these are converted, and due to the reason that we are assuming it, that if we are converting it, we are assuming it from the beginning of the year. बेटा ये जो कन्वर्जन की बात कर रहे हैं ना हम लोग की पोटेंशियल इक्विटी शेयर में हम लोग अपने डिबेंचर्स को कन्वर्ट कर लेंगे, ये एक एजम्पशन है, ये एक्चुअल में कन्वर्जन नहीं हो रहा. ये डिल्यूटेड ईपीएस जो हम निकाल रहे हैं ये ES20 की वजह से निकाल रहे हैं और कैलकुलेशन पर्पस के लिए हम सब कुछ कर रहे हैं. ये कैलकुलेट करके हम लोगों को कुछ डिसीजंस लेने हैं कि जो कि हमारे लिए फायदेमंद होते हैं. आप देखो एक कंपनी है, उसका जो ईपीएस है, लेट्स टेक एन एग्जांपल, एक कंपनी है उसका आपने बेसिक ईपीएस निकाल लिया, वो आ रहा है ₹20 पर शेयर. यू आर वेरी हैप्पी, ये तो 20 पर शेयर आ गया. बट एक चीज यहां पर काफी इंपॉर्टेंट रहेगी कि ये 20 पर शेयर क्यों आया. बिकॉज मेरा 20 लाख का प्रॉफिट है और मेरे जो इक्विटी शेयर्स हैं वो 1 लाख है. अब इस केस में बेसिक ईपीएस तो अच्छा लग रहा है, बट वो कह रहे हैं कि आप साथ में डिल्यूटेड ईपीएस भी निकाल दो. हो सकता है डिल्यूटेड ईपीएस जो है वो आपको कम आ रहा हो. आपने डिल्यूटेड ईपीएस निकाला सारी एडजस्टमेंट्स करके, वो आ रहा है 15 पर शेयर. तो डिसीजन मेकिंग के लिए ये अकेला 20 पर शेयर सफिशिएंट नहीं है, क्योंकि आज नहीं तो कल जो कन्वर्टेबल डिबेंचर्स हैं उन्होंने इक्विटी शेयर में कन्वर्ट हो जाना है. और जैसे ही वो कन्वर्ट होंगे आपको कोई डिविडेंड थोड़ा मिल रहा है. आर यू गेटिंग डिविडेंड ऑफ दिस अमाउंट? नो. दिस इज जस्ट अवर एजम्पशन कि आज भी कंपनी ने इतना पैसा कमाया तो कंपनी हमारे फायदे में चल रही है. बट जिस दिन ये कन्वर्जन हुआ, कन्वर्टेबल डिबेंचर्स इक्विटी शेयर में कन्वर्ट हुए, इमीडिएटली ये जो 20 लाख में ये उनको भी इसमें से शेयर मिलेगा. दे विल आल्सो गेट शेयर आउट ऑफ दिस. वो लोग भी इसके शेयर होल्डर्स बन जाएंगे. जो रिजर्व बनते जा रहे हैं वो रिजर्व के अकेले आपके नहीं है, वो रिजर्व उनके भी हैं जो कन्वर्टेबल डिबेंचर के रूप में किताबों में बैठे हुए. ड्यू टू दैट रीजन हम लोग डिल्यूटेड ईपीएस का कंसेप्ट करते हैं. बेटा diluted EPS concept is done because we are well known that this 20 lakh of profit is not related to the equity shareholders only, which are the current equity shareholder. Instead, it will belongs to those equity shareholders only, which will be converted into equity share later on. So due to that reason, we have to calculate the diluted EPS also. Just assume we have issued the debentures at 5% interest only, but later on they will be converted into equity shares. So due to that reason, we have to recalculate our EPS. This is not the actual EPS. Actual EPS is this one, because the EPS amount is not given to us. It will be just our assumption You know it very well. Company is not declaring dividend equivalent to the amount of EPS. Company is just giving dividend as per their own wish. So if company is not giving any dividend, even then we are calculating basic EPS and always remain happy that company is earning so much profit and that profit is kept into reserve for our benefits. So whether it is for our benefits, no, it is for the benefit of potential equity shareholders also in addition to us. So due to that reason it is done, beta. Exactly, we have to do that, Neha. Exactly, Karthik, you are right. What does dilutive means here? Dilutive means which will dilute, which will change. Dilution means changes. Okay, clear. I think I am clear on this concept, beta. Are you enjoying this or not? It's not tough, it is enjoyable. Let it be very much clear. Don't worry, this is not tough. So what are the disclosure requirements? Disclosure requirements are very simple and sober. As earlier also we have discussed, we need to understand three things. One is the objective of the AS, second is the body of the AS, third is the disclosure requirement. We have to calculate the disclosure requirements, whether it is basic or diluted. So that we have to give what is the basic, what is the diluted EPS, and also we have to give if there is any change in EPS due to the reason of bonus issues or right shares. We have to make reconciliation of NP or NL with the numerator that we have already discussed how to get it. I already let you understand reconciliations. Nominal value of shares along with EPS figures, all that we have discussed better. These are voluntary and recommended, these are not compulsory. That is per share amount for various component of net profit, terms and conditions of the contract generating potential equity shares, whatever the terms and conditions are finalized with those. If profit or loss include any extraordinary item, as per ES5, then basic and diluted are to be adjusted accordingly. Post balance sheet events are also to be adjusted. That is interested to say. So I think this is clear, beta. AS is very lengthy, but I think we are clear on this. I try to make it very simple with this presentation. Now I would like to discuss some questions with you. For better understanding, I would like to discuss some questions with you. Let's come to the detailed AS. Okay, there's no question given to you. Any example given to you? Illustration or example? Yes, these are given to you. Illustrations are given to you. Let's solve some illustrations so that it will be better because these are all practical AS. So on practical AS, we should have to understand the concept. These are the part of the today's presentation because it is mandatory in this case. Without this, you are unable to understand this. So illustration number 2 is in front of you. You have to calculate its weighted number of shares fast. I'm giving you 2 minutes to get it. 2 minutes. Speed up. No need of calculating and giving me the answer. You just send me what you have to do. Very simple. Maybe you have done it. Is that clear? According to my opinion, it should be 2100. You may check it. Okay, date is also different. Sorry. Date is also different. It is 1800 into 10. So what is the closing date assumed by him? Yeah, he have assumed that the closing date is 31st of December in this case, which is not good, but even then he has taken it. So he has assumed that the closing date is 31st of December. Accounting year is January to December. He have assumed old concept, which is not good nowadays, because nowadays you are practical and more intelligent in this case. So this is the way how you can get it. 1800 into paid up value into 12 months. 600 into paid up value into up to 31st December. I am calculating it on the basis of 31st of December. Accounting year is January to December that we are assuming. So divide by 10 is the face value, 12 is the months. You can get it. You have to divide it also, no beta. Karthik, you are also wrong. 12 by 12 की करना पड़ेगा. So why 3 months? 31st October, November, December. Okay, sorry, 2 months. 31st October है ना, November and December, only 2 months are there. Exactly. So this is with you. I think this is clear, beta, everyone. 1800 into 10 is the paid up value. Into January to December, there are 12 months. 600 into paid up value 5 into 31st October to 31st December 2 months. Divided by total, divided by the face value, that is 10, and divide by, you will also divide by total number of months. Total number of months are 12. Good. You have done it 2 months, but you have taken more than 2 minutes. Illustration next. This is about bonus shares. 18 lakh equity shares, 18 lakh is the profit for last year. 60 lakh is the profit for the next year. Number of equity shares outstanding until 30th of September. That is 20 lakh. Bonus issue was made on 1st of October 2012 was 2 equity share for each equity share outstanding on 30th of September. So how many equity shares will be issued? Number of equity shares outstanding 20 lakh. He says bonus issue was 2 equity shares for each equity share outstanding. That means for we have issued 20 lakh into 2. So 40 lakh shares are issued as bonus shares in this case. Earlier 20 lakh shares were there. Bonus share is not estimated base share. These are actually issued by us. So number of equity shares are with you. EPS is to be calculated by way of whatever is the profit for the current period divided by number of equity shares. Number of equity shares are 20 lakh plus 40 lakh. This is the EPS which you have to calculate. Here you need not to multiply it with, in case of bonus shares, you need not to multiply it with the period. So 20 lakh plus 40 lakh. Is that clear? One more thing we have to discuss, that is adjusted EPS. What is the adjusted EPS? Adjusted EPS is somehow calculated for the previous year, in the last year, not for the current year. In the last year, our profits are rupees 18 lakh, because you know it very well that bonus share is given for the last year, not for the current year. If we have declared bonus share in the current year, that is not right. Actually, bonus shares is given in 2012. but these are given for the year 2011. We know it very well. Bonus shares are given if out of the profits only, after earning the profits. So if we have earned the profit, obviously we have as on 30th of September 2012 or as on 1st of October, we have earned the profit of 2011 only, not the 2012. For 2012, we have calculated 60 lakh divided by 60 lakh, it's okay. But for in that case, our last year profit will also, last year EPS will also change. That is called adjusted EPS. Adjusted EPS meant for the EPS which has been changed due to the reason of issue of bonus shares or right shares or share split or consolidation. Those are the important cases which we have discussed. In case how it is to be calculated, 18 lakh divided by 60 lakhs means after issue of bonus shares, whatever the number of shares are there, that will be divided. That will be used in denominator. बेटा बड़ा सिंपल है कि अगर हमने बोनस शेयर इशू करे हैं तो मैं पिछले साल का जिस साल के प्रॉफिट के बेस पर हम ये बोनस शेयर इशू कर रहे हैं उसका भी ईपीएस दोबारा से कैलकुलेट करना पड़ेगा। अगर हम 1 अक्टूबर को इशू कर रहे हैं बोनस शेयर, ये हमेशा पिछले साल के लिए होते हैं, लास्ट ईयर के लिए होते हैं। तो अगर ये 2011 के लिए है तो आपका जो ईपीएस आपने 2011 का निकाला होगा वो निकाला होगा 18 लाख डिवाइड बाय 20 लाख, बिकॉज 18 लाख वाज द प्रॉफिट, 20 लाख वाज द नंबर ऑफ शेयर। तो ये बेसिक ईपीएस आपका था लास्ट ईयर, बट ये ईपीएस चेंज हो जाएगा लास्ट ईयर का आपका, जिसको हम कहेंगे एडजस्टेड ईपीएस। उसमें हम लोग डिवाइड करेंगे इसे जो टोटल नंबर ऑफ शेयर्स है इंक्लूडिंग बोनस शेयर्स या राइट शेयर्स या शेयर स्प्लिट या कंसोलिडेशन, जो भी हम करेंगे। bonus shares are issued for last year, so either these are issued from CRR, there is no problem, but this is the concept. So why it is assumed that bonus issue from previous year profit? So basically बेटा लास्ट ईयर प्रॉफिट्स ही तो होते हैं जिससे हम बोनस शेयर इशू करते हैं। मतलब आफ्टर ऑल सीआर इज आल्सो प्रॉफिट रिजर्व, इट्स आल्सो रिजर्व, इट इज नॉट समथिंग एल्स, इट इज आल्सो रिजर्व। हु कैन से दैट सीआरआर इज नॉट a reserve? CRR is also a reserve. If we doesn't have CRR and we are interested to issue bonus share, from where bonus share is to be issued? Bonus share are allowed to be issued from CRR, GR, profit or loss account, any reserve, there is no problem. Who says bonus share is issued out of CRR only? This is purely wrong. Your assumption is 100% wrong. Let it be very much clear, beta. Karthik, you should have to review this once again. Okay. So let's go forward. Yeah. Now I'm going to discuss about the right share. Net profit for the year 2011 is given to you 11 lakh, for the next year 15 lakh. Number of shares outstanding prior to bonus share, it was 5 lakh. Right issue price 15, means shares are issued for rupees 15. Last date to exercise right is 1st of March 2012. So this has been issued in the current year, but obviously it relates to previous year. Once again, right share is 1 share for every 5 share outstanding, that is 1 lakh new shares will be issued. 1 share for every 5 shares outstanding, that is 1 lakh shares will be given. Again, fair value of 1 equity share before the right issue was 21, but we have given it for rupees 15 only. We have given it for 15 only, but at that time fair value of our equity share is 21 per share. So you have to compute EPS. How to get it? Something different. Good concept is there. Let's try to understand the formula first. Fair value of shares immediately prior to exercise of right. What is the fair value of total shares available with you? We have 5 lakh shares with us at that time, and we know it very well that their value was 21 per share. Now, company received further amount. How much is the amount received by the company? Company received 1 lakh into 15. So this much amount is totally received by the company divided by number of shares. So obviously market price will change. This is a concept that whenever right shares are issued, our market price is normally decreased. Why? Why decreased? Assume I have 100 shares of a company. I have purchased it for rupees 20 per share. So the value of my purchase value is myself Pradeep Makkad. So I have purchased 100 shares for rupees 20 each 5 years back or 4 years back. So I purchased it for rupees 2000 only. Whenever I will go and sell these shares, I'll keep it into mind that my cost is 2000 and I'll sell it at more than 2000. But whenever I'll get more shares, I get 100 more shares, assume at rupees 10 per share. That is for rupees 1000, I get 100 more shares. Now, how much shares are with me? Total, I have 100 plus 100. I have 200 shares with me. And the cost to me is 2000, which I have paid earlier, or which is the market value at that time, plus 1000 at which I have purchased now. Now my average cost comes down for 200 shares. It is only 15 per share. So whenever I'll sell my shares, I will sell share keeping into mind that my shares are worth rupees 15 per share. This is a human mentality which comes into the picture. So due to that reason, we have to calculate this price. This is called theoretical X-right fair value per share. This you have done in right shares chapter also, if you have done it in BCom or CA somewhere. CRR is used on, is that clear? Note it down if you are interested. So I think CRR is also clear to everyone. So adjustment factor is not required to be understood. It is better whatever you have understood according to this X-right formula, that is always easy and understandable. This is just for the purpose, number of times he demands it in your exam. So you will have to give it. This is just for memory purpose. It is not a worthful thing. Computation of adjustment factor, that is fair value per share prior to exercise of right divided by theoretical X-right value per share. That made me demand that how much was the adjustment factor, that is 1.05 that he has calculated. And then computation of EPS. How to get the EPS? We know it very well. In this case, what is the profit? See, here it is. How much was the profit, beta? Profit was 15 lakh for the front year and 11 lakh for the last year. So in this case, 11 lakh divided by 5 lakh, because at that time 5 lakh shares were there, but it has to be restated after issue of right shares. So that can be done by this way also. There is another method also. I may give you that method. It is easy. If you will memorize it, it will be easy. Don't go for the another method, because that is again something new and it will be typical. It is easy. You have to just multiply it with the adjustment factor. If you can memorize it, if you are interested to understand it, I will like to go for the details. These are just the formulas which you have to memorize. EPS for the year, including effect of right shares. You have to multiply it with the 2 months because it has been issued for 2 months. These are issued for 10 months. Accordingly, these are multiplied and calculated. I think I have tried to clear you many points regarding this chapter and assumes everything is clear. Even then, if there is any doubt, we will take it in the next lecture. Try to review the next AS also before coming for the AS. It will be easy for you. Tomorrow there is a class on Saturday also, and we have to cover next AS in that. All the best. We'll meet in the next lecture. Okay. Try to get good feedback also. So could we close the session? सर जी ये illustration समझ नहीं आई. No problem beta, we will discuss it in the next year. Khushi, you may ask tomorrow, I'll help you. Harsh, we may discuss it tomorrow. No problem, because time is over. I have to close the session. We'll meet in the next lecture tomorrow. All the best. Bye. Ashok ji, could we close the session? हाँ जी.